Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 18th of September 2022. And last week we saw gold prices fall while silver prices rose. This coming week is an important week for both the US dollar value and gold and silver prices. Why? Let's take a look. Precious metal prices first. Gold fell $42 last week, falling from $1,718 to $1,676, having hit a high of $1,735 and a low of $1,654, a fall of 2.5%. In sterling terms, it finished the week at £1,467. That's down £15. And in euros, it closed at €1,674. That's down €36. Silver rose 77 cents, rising from $18.87 to $19.64, having hit a high of $20.02 momentarily and a low of $18.80, a rise of 4%. So that's 4% up for silver and 2.5% fall for gold. In sterling terms, silver closed at £17.20, up 94 pence, or nearly a pound. And in euros, it closed at 19.61 euros. That's up 0.84 euros. Obviously, with this change, the gold to silver ratio fell from 91 to 1 to 85.3 to 1. Now, looking at the prediction we made last week, we said we expect to see gold trade between 1650 and 1750, and silver 1750 and 1950, with 1650 and 1975 as outliers. So similar to last week, gold traded well within our predicted normal range. The difference between its high and low was a rather larger than usual $81, something we predicted would happen simply because of the announcement that was due for the CPI and retail sales figures. Silver broadly traded within our normal range but hit the higher levels rather than the lower levels, and closed above that range by 24 cents, lower than our outlier range. The difference between silver's high and low was $1.22, and in fairness, silver remained quite robust during the week, and we shall cover this in more detail after looking at other financial data. And we kick off with Bitcoin, currently standing at $19,850, down $1,494 on the week. Cryptocurrencies have taken a hit because they tend to move similarly to the equity markets, and also there have been some SEC guidance which could affect cryptocurrencies in the United States. Equities were down quite significantly this past week. The Dow Jones closed on Friday at 30,822. That's down 139 points on the day and down 1,329 points on the week. The S&P 500 closed at 3,873, down 28 points on the day and down 194 on the week. And the Nasdaq Composite closed at 11,448, down 103 points on the day and down 664 points on the week. We have noticed a relatively close correlation between cryptocurrencies and the Nasdaq Composite. Oils were marginally lower again this week. Brent crude closed at $91.35, that's down $1.49, and WTI crude closed at $85.11, down $1.68. Now the dollar index stands currently at 109.76, that's up 0.76 on the week, and like last week, we saw the index actually rise above 110. We are certainly expecting it to rise above 110 this week, in view of the FOMC announcement on Wednesday. Now, with that in mind, let's now take a look at the economic data that was announced last week and the important, in fact, very important data to be announced this coming week. Looking at last week's data, the most important day was Tuesday, when we had the CPI figures. And as we can see on this chart here, they were much higher than anticipated. The CPI for August came in at 0.1%, against an expectation of -0.1. Core CPI was twice that of July's figures and twice expectations, the markets were expecting a levelling out, and this simply did not occur. And the CPI year on year was higher again than expectations at 8.3%, thus showing how sticky, for the want of a better expression, inflation is proving to be. Then on Wednesday we had the producer price index, which was as expected. Now Thursday we had the initial jobless claims, and we have to say that the job situation has been looking reasonably healthy. You have to also bear in mind, however, that it does give a false anomaly because, of course, many people are having two jobs in order to provide what traditionally would have been a single income. Then had retail sales, and these were actually slightly higher than expectations at 0.3% against at 0% growth. However, if you exclude vehicles, the retail sales figures came in at minus 0.3 against an expectation of plus 0.1. Manufacturing indices, however, were broadly disappointing, certainly as far as the Philadelphia Fed was concerned, and the import price index and industrial production index were slightly worse in production index than anticipated, but a relatively small change. And then on Friday we had the UMich Consumer Sentiment Index, which came in at 0.5 point lower than expectations, but higher for September than it was in August. Now, this coming week is a critical week. Why? Because of Wednesday. Because on Wednesday, the FOMC of the Federal Reserve will be announcing its interest rate decision. Then on Thursday, jobless claims, and Friday we have the flash manufacturing and services PMI. So really, all attention is going to be focused on Wednesday. Gold was hit quite hard last week, falling to as low as 1654 on Friday, and then staged a small recovery, closing at 1675. Now, we stated last week that some analysts have gold sights set on $1,500, and this is around the lowest level we could potentially see gold sink to. Now, we don't advocate the view that some on the fringe who claim gold will hit $1,000 again, as we also do not advocate those who are saying it's going to pump to $3,000 anytime soon. It's undoubted that precious metals are going to remain under pressure while the Fed continues with its interest rate increase program. Chartists point out that if gold falls below $1,661, a downtrend resumption occurs, and if it rises above 1747, the trend will turn bullish. We currently see the downtrend as a more likely scenario. We also stated last week that there really are two key target areas for silver, $20 and $15, and we saw the $20 level being touched for a brief moment. $20 is clearly going to act as resistance, with super strong resistance at 21, a level we're not really expecting to be reached. Friday was an exciting day for silver, as initially it fell and then bounced back. We stipulated last week that the 50-day EMA rests just below the psychologically important $20 level, and this is acting as strong resistance. Now, with interest rate rises on the horizon for some time to come, at least for the duration of 2022, and the fact that many global economies are either in or entering recession, there is little to justify a much higher silver price. Yes, we may see a shoot up by $1 or so and potentially get very close to 21 at some stage, but we simply do not see these levels holding for the next couple of months. Now, in view of the recent CPI figures and also the fact that the FOMC will not meet again until November after this coming week's gathering, the odds are that we shall see a 1% interest rate rise. Now, previously we stated we could guarantee 0.75%, when others were suggesting just 0.5%. But with inflation staying stubbornly high, it would make a lot of sense to hit it hard now with a 100 basis points rise, and perhaps moderate down to 0.5% in November and or December. Whether the Fed has the guts to do that remains to be seen, but we are positive 3/4 is on the cards, and we would actually quite admire the Fed if it raised it a full 100 basis points, because undoubtedly that will hit the markets. Now, we again advise to pay close attention to the US dollar index, because it has a strong negative correlation to this market, as does the interest rate market. With the FOMC decision due on Wednesday and the Bank of England delaying its decision until this Thursday due to the Queen's demise, there is little to stop the dollar index from strengthening further in the middle part of this week. Now finally, we also issue an additional area for concern. Should we see the Russia-Ukraine conflict resolve itself, then the premium placed in precious metals as a hedge against global uncertainty will reduce, thereby placing additional downward pressure on prices. Yes, it could mean that the end of the conflict could free up additional global capital and allow more free trade, but the initial response will be negative for precious metal prices. So to conclude, we're still not bullish precious metals taking the next 3 months into account. There are too many headwinds to see any major spike in price, and ironically, the time one could argue is a good time to buy, without giving investment advice, will be when the Fed and the other central banks start to reverse their hawkish action as apply to interest rates. When we get close to that time, we'll certainly let you know. So with this in mind, we're lowering our expectations further for gold and expect it to trade between 1600 and 1725, with 1575 and 1750 as outliers. We forecast silver will trade between $18 and $20, with 17 and 21 as outliers. Larger than normal spread, as we are expecting increased volatility. So what do you think is going to happen this week? Are precious metal prices going to be hit hard? Are they going to go up? Share your thoughts, please. Thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Please have a safe, enjoyable weekend, a prosperous week ahead, and we shall repeat this video tomorrow under a different thumbnail and headline. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.